Hi there, welcome to another Answers and Replies. I am Kneppy and I invest primarily on the stock market. Not only on the stock market, I have other investments as well, but to be honest with you, I enjoy the stock market by far over everything else. And this is the 1 hourly Nasdaq index, looking pretty ugly right now. Nasdaq was down 2% overnight. So you might be thinking we will have a bad day on the ASX on Monday. Not true, because in fact, the Australian futures are up. So the Nasdaq had a pretty bad day, down 2%, but the Dow Jones was up 0.6%. And if you actually have a look at some of the American companies, in fact, I do have a USA watch list with 227 companies on it. So a lot of the tech companies were down. PayPal was up. Shopify was up. Facebook down 4%, Nvidia down 10%, Netflix down 9%. Then you get Target up, Disney up, Lowe's up, Home Depot up, Zillow up, United Airlines up, Unity up. That's actually Under Armour, not United Airlines. ARK Investments down, of course. Walmart up. Okta down, Ford up 0.66%. So a really interesting day on the American markets. A lot of the tech companies down big, while the rest of the market was up. So that's why our futures is looking pretty good. In fact, if you go to the ComSec and just look at the market indices, you'll see the ordinary is down 81 points, but the ASX SP 200 says it's up 27. Now, that was not up 27 yesterday. That's actually the futures. That is looking at what the market might be opening up on Monday. So maybe a good day on Monday, unless bad things happen in the world. Anyway, today I am doing the answer and reply video. So I'm going to go through some of your comments, your questions, your replies, whatever. Not your replies, because I'm replying, that you have left on my videos in the past week. Now, I'm going to start not at the very first, or go all the way back to the very first comment after my answer reply video last week. I'm going to start with a very important comment from Liam Jones, and I think this needs exploring. I'm just going to zoom in a little bit here. I think this really needs exploring. He left it on my last week's answers and replies, but he left it 20 hours ago. So we're talking about close to midnight last night. And he says, I'm assuming it's Liam Jones. I'm not sure if Liam can be a girl's name, but I don't think it can. But anyway, I'm starting to get super concerned. My portfolio has absolutely plummeted. What is going on with the market right now? So much unreasonable selling. I'm out about 3.5% in profit right now, down from 16% profit. And I'm considering just wiping it all and restarting. Have you ever been in a situation like this? Now, the funny thing is, we haven't seen much of a correction. So this comes back to dealing with your emotions. And I think as an investor, dealing with your emotions might be the hardest thing you have to do, might be the biggest obstacle you have to do. Now, I started investing just after the GFC, and it was pretty good timing. And even at that point, when the markets were at not historic lows, but companies were at really good value, I was getting told by a lot of people, don't do it. It's too risky. You're going to lose all your money. And that was the fear back then. I know a few people who lost a fair bit in the markets during the GFC, and they completely sold out. They never got back in. And that is probably their biggest mistake of their lives. And the reason they did that is they couldn't control their emotions. They saw the value of their portfolio going down, and they just had to sell. They had to stop the rot. But the funny thing is, if they kept holding on, when things turned around, they would have seen their portfolio go through, or the value of their portfolio go through the roof. So controlling your emotions, in my opinion, is one of the most important facets of an investor. And if you are able to handle these little drawdowns, and these sort of corrections happen all the time. And when I say all the time, they happen all the time. We just had one last October, just like this. Maybe for you it was a little bit different, but if you go to, say, the XJO, and we'll go to a daily chart, not the daily chart. This is not a significant correction. Just looking at this is the daily chart going back to start of 2022. We have seen some serious, some worse corrections than what we're experiencing, particularly in June and 2022. If you don't remember June 2022, maybe you're a new investor, but we saw the market or the XGO go down in successive days, 1.25%, 3.6%, 1.3%, 0.15%, 1.8%, and I think in a week it was down about 5 or 6%. So let's go back to the weekly chart. And yeah, so in consecutive weeks in June 2022, the XGO was down 4% and then 6.6%. That's over 10% drop. That's a correction. This week, on the last week, the XGO was only down at 2.8%. So this is not a correction. This is something you should be able to deal with quite easily. Now, another question is, what is the makeup of your portfolio? Are you happy with the makeup of your portfolio? Now, personally, I have 3 portfolios. So I have my quality portfolio, small caps, and trading. Now, one of the ways you can deal with emotions, and managing emotions is hard, really hard. One of the ways to do it is to have rules on when you buy and sell. Now, in my trading portfolio, I have sold a lot of companies in the past week because I have hit my rules on when to sell. So that makes my decision making really easy, knowing when to sell. And that takes the emotion out of the equation. That's one of the benefits of trading instead of investing, because even investing, you're not quite certain if you make the right decision. Do I sell now or not sell? What if I sell now and the share price starts going up? But what if I don't sell and the share price keeps going down? So you take the emotions out of the equation when you trade, and you have rules. So those companies that are in my quality portfolio, I'm not going to sell those. I don't care if the market's down a little bit. I am not going to sell unless the company shows me a reason to sell. And I hope to hold those companies for many, many years. And that's the other thing. Another way to control your emotions is understand your time frames and understand this is just a little blip when you're talking about a longer time frame. So if you look at the monthly chart for any indice, you'll notice it goes up through time. So this is the monthly for the XGO. It goes up through time. But during this period, so this goes back to 2000, during this period, you see there are times when the stock market drops. We have the GFC here dropping a fair bit. COVID-19 dropped a fair bit, but then there was a rapid recovery. Even in between those years, we had little corrections. And that maybe is what we're experiencing now. Go back prior to that. If we go back to 1987, remember that 1987, a little bit of a correction in 1 month. It fell 42% in 1 month, October 1987. And then it started going up again. So over time, the stock markets go up. And the other way to think of this is, I was telling this to someone else. Go Google the richest people in the world. So look at the 10, 20 richest people in the world. And the majority of the richest people in the world, if not every single rich person or richest person in the world, will have something in common. They got rich by building a company or investing in companies. They didn't get rich by property. They didn't get rich by cryptocurrency. They got rich by building companies, or for Warren Buffett, investing in companies. In fact, there might be a few other richest people in the world who are fairly similar than Warren Buffett. That's the reason why I started investing in the stock market. I did my research, and the stock market, equity markets were the best type of investment. Now, one of the negative things about investments, also one of the advantages of the stock market, is we can see the share price movements every single day. In fact, every single second. But when you talk about property, you don't see the property price changes of your house on a daily basis. Even on a weekly or even monthly basis, you don't see the prices. There is not an up-to-date market of your house on the market. And if there was, you'd probably see wild swings in the price you could sell your house for, but it's not there. That's the difference between the property market and the equity market. And a lot of people have the wrong idea of the equity market. They think it's risky. And the reason I think it's risky is because there is an ongoing share price discovery every single second for some companies. And they believe because the stock market goes up and down like it is right now, it equates to risk. But over time, it is by far the best way to build wealth. So employ, go look at the richest people in the world. And I can almost guarantee you, every single one of them got rich by, again, building a company or investing in companies. I know. So the main point here is managing your risks. Now, every single person, or managing your emotions and managing your risk as well. That's what I'm doing now with trading. And one of the reasons I'm selling companies now is to just manage my risk. And by doing that, I manage my emotions. Now, I do have to understand that everyone is different, and maybe I'm different than you. Maybe you have a harder time doing that sort of thing or managing your emotions, and you just can't deal with it. And if you can't deal with it, I think Charlie Munger said that if you can't handle these big drawdowns, I think he said even 50% drawdowns, maybe you should not be this type of investor. So that's the thing, you have to decide whether you're this, or you should be this type of investor. Maybe you should put all your money into property, or maybe just ETFs. Maybe that's the solution, because I still think ETFs are a better investment than property. So the question was, I think the ultimate question from Liam was, have you ever been in a situation like this? Yes, every year. In fact, I've been investing since just after GFC. Time and time again, I've seen significant drawdowns in the value of my portfolio, and then it recovers and goes higher. Another drawdown, it recovers, it goes higher. Yeah, so I've been in this situation quite often. So thank you for your comment, Liam, and hopefully, you're able to understand that managing and dealing with your emotions is one of the more important aspects of investing on the stock market. Anyway, so what I'll do now, actually, I'll go to the top here. So on occasion, I do look at the comment section, because on occasion, I do get spam. Here's one, 14 hours ago. What's the most common winning strategy or investment strategy for a new beginner? And then as soon as this person writes a comment, there's about 15 or maybe about 10 replies, all within a few minutes of each other. And a telltale sign of this is when all of a sudden one video has a massive amount of thumbs up, because they all give this a thumbs up, so more people read it. And the easy way to deal with this is I just report it. Unwanted commercial content or spam, and it just disappeared. Now, this does not happen with every video, it just happens on occasion. And that's one of the main reasons I actually do have a look at the comment section. Sometimes by having a look at the comment section, I actually do have a gaze at some of the comments that are left. So for instance, Liam Jones, that's how I saw Liam Jones' comment when I just having a look for the spam comments. So let's go all the way back to the very last announcement, or last comment I talked about in last week's video. So that's about 7 days ago, I assume. I'm trying to remember what it was. Oh, it was this one here. Yeah, it was this one here. Panda Magic Hero, talking about Brickworks, Block, and Ventura. So we'll start with Bryn, and that was just a nice little. Actually, in fact, I can tell just because when I've liked it, it's blue, the like button, and I have not liked this comment by Bryn, so I'm going to like it. Thank you. Okay, thank you for Xtian Turktable. Would have liked to hear comparison with comparable companies, Egboral, about EPS trends and potential uses of cash surplus, including prospects for dividends for this year. This would set up a positive news flow to sustain a rally well into 2025. Well, yeah, they are fairly. This is talking about Wagner's. They are fairly similar to Boral. I'm not sure if Wagner's should be thinking about dividends just yet. I'm not the biggest fan of dividends. I'm going to be honest with you. I prefer companies who are providing cash flow in their operations and free cash flow to put that cash flow to grow the company. I think that's a much better use of cash flow, potentially. Some companies shouldn't do that, and I'm thinking the banks, maybe even Telstra. But I think a majority of the companies in Australia should try to grow particularly if they're really good at capital allocation decisions. So when a company has, and in my opinion, capital allocation decisions by management is the most important job they have. Some people might say culture, but I think it's capital allocation decisions, particularly for companies that are profitable. So you just think a company produces $100 million in cash flow. That might seem a lot, maybe $10 million in cash flow in a year. What are we going to do with that 10 million? Do we give it all back to our shareholders as dividends? That means we can't really grow. Or do we spend $5 million of that on an acquisition, maybe a share buyback? Or maybe we spend that $5 million on building better machinery so our plant can become more productive. So I do like those companies who did give a token dividend, a small dividend, and then spend the rest of the money, sort of like CSL. CSL does this. They give a token dividend and then they reinvest the rest of the money they make in the business to grow the company, to make the company bigger in the long run. And I've said this before, Australians tend to be over-obsessed with dividends. Anyway, so I don't know much about, well, I'm not going to even compare to Boral because I think there's a big chance that Boral will be taken out by Seven West Group soonish, rather than later. So maybe Wagner's will be one of the only cement companies on the ASX. So thank you for your reply, your comment. I'm not sure I replied to your comment with enough information. Okay, someone who likes the I should like that. Someone who likes the length of the videos. Thank you, Ryan Mott. Thank you, Jay Chong. Thank you. Thanks, Kneppy. Thank you. Thank you, Gumnut. Okay. Did you end up buying some Clarity Pharmaceutical shares? No, I have not. I have not, Chris and Caroline. I have not. I have just denied about Clarity. One of the main reasons, I do think this is a hedge against my position with Telex Pharmaceuticals. This is the monthly chart for Clarity. That looks pretty good. And I do think this is a hedge, just in case. But again, Clarity Pharmaceuticals is still a story stock. And I'm trying to get away from investing in story stocks. I want a clear story. And when I say clear story, I mean I want a company selling something. I want a company generating revenue, and preferably a company that is profitable and generating cash flow in the business. So Clarity Pharmaceuticals is not there. And to be honest with you, chart looks like it's just going sideways now, consolidating. I'm turning to looking at 1 hourly charts a little bit more now. And when you look at the 1 hourly chart for Clarity, it's just going sideways. So at this point in time, even if I was thinking about investing in Clarity, I probably could remain patient for now because nothing really is happening with the share price and the chart. But I'm still thinking about it just because, again, it's a hedge against Telix, because I do think Clarity, if they are successful, will have a better product over Telix. Okay. So thank you, Chris and Caroline. Simon says, I think gold pulled back to the US dollars, gathering strength, increasing doubt the Fed will cut rates this year. Yes, I think without doubt, the Fed will not cut rates. Well, I shouldn't say the Fed won't cut rate. I shouldn't say the Fed won't cut rates this year, because that is a certainty. I say it's increasing chances the Fed won't cut rates this year. And if they do, maybe once, if that. There's no reason they have to cut rates. There's absolutely no reason at all, particularly if the economy remains where it is. There's just no reason. And don't forget, where interest rates are right now, it's fairly normal through history. In fact, when I bought a house, interest rates were where they are right now. And we weren't saying anything about them. We didn't think they were too high. We didn't they were too low. In fact, just after I bought a house, interest rates rose a little bit, and it was like, no, whatever. And then they started to drop. And when they started to drop, it was actually really good because more pay your payback. Anyway, can I ask what sort of money roughly do you have invested in the markets at any given time? Thank you, Swimming. Yes, I can answer that, of course. So any given time, it actually increases through time. It should increase through time. That's the whole point of investing. Right now, my cash levels have risen over the past 2 weeks because I've sold some of my trading stocks. So right now, I'm just doing quick maths in my head. 50, say 40 to 40, 80, 100. So I've got about 20 to 25% in cash right now. And I'll put overall my investments would be towards $600 to $700,000. So that's how much I've got invested. And some of that is in super, and I've increased my non-super investments to about 300,000, and that's increased from zero in March 2020. So I took everything I owned, all my investments, in January and February in 2020 to pay off my mortgage. So I wanted to become debt-free because I eventually wanted to turn part-time. And the best way to become part-time is you don't have to pay a mortgage or any debt or rent. It's the greatest thing in the world to have a roof over your head that you're not paying for. And then I just started building from there. So over the last 4 years, I've gone from 0 to 300. 2020, 2021 really helped to build up my equity. And one of the reasons I went part-time is I realized if I can invest the way I've been investing, I'll have about $5 million by the time I turn at 65. And I think $5 million by then will be plenty enough. And that's if I keep investing the way I do. And if I improve, maybe I could have even more. So at any given time, probably the least amount I have in terms of equities compared to cash, if we had a significant correction. So if we went down to, say, below 6,000, I'd probably go almost 100% to cash. And if I saw or thought the market was a little bit overvalued, or if we started going to correction like we are now, I increased my cash levels. Some people say you can't time the market, but that's not the point. You can de-risk. It's all about risk management. It's all about risk management because I have no idea how long this correction will go for. It might be finished already, and we might start going back up, or it could continue for the next few months. And in fact, we could go down another 10 to 15%. So it's all about managing my risk. All right. Okay. Hi, Kneppy. Kneppy. 2 Ps. 2 Ps, people. David, I don't care. I should thumbs up the wrong. What software do you use? If you're talking about a chart, it's called TradingView. Yes, TradingView. I use TradingView. So this is TradingView. I used to pay software on my Mac, and that was a clumsy software. And then, TradingView about 2 or 3 years ago, and it does everything much better than that software. I forget what that software was called. It was a chart software. There's other softwares I have used or tried. ProTrader was okay. That's it. Probably the only one I've actually looked at, ProTrader. But TradingView does everything I need at this point in time. So hopefully that's all you mean. That's the only really software. Well, it's not really software, is it? Or is it? I don't know. Woolworths announces AI shopping tech company. I'm going to go to management, Woolworths management, to say that, because if they're a tech company, no one will care. Shoppers won't care that there might be price gouging. They're not really price gouging, are they? The government, and we should be focused on the housing situation in this country, focused on fuel up the road to almost $2.50. Ridiculous. Oil prices haven't increased all that much to justify that. Insurance going through the roof. Why is there not inquiries on all those? Anyway, thank you, Jack Sue. Hi, Kneppy. I like your thoughts on some of the companies you reviewed. I do have Woolworths on my chart watching. Do you trade commodities much? Not commodities in itself, no. I tend to trade things like platinum, oil, and others, including live cattle by ETFs. No, I don't trade commodities. So some things I don't do, trade commodities. I have worked, though, interned at a futures exchange, futures trading floor. In fact, it was the largest trading floor west of Chicago. This was in Tulsa. Back in 2000, the company was called Williams. They were an energy company trading energy. A really interesting experience. The team I was working with the year before, they all got bonuses of over $100,000 because they made the company, what was it, about either $10 million or $100 million in the winter by trading gas futures. And the way they made a lot of money is the price of gas rallied on the news from the official climate forecaster, and someone within the team knew what sort of personality the official climate forecaster was, and they realized the official climate forecaster for the winter, because gas either goes up or down based off if it was going to be a warmer or cooler winter than average, amazingly or not. So the price of their forecast, or they made the money by forecasting the official forecast, which I found fascinating. They weren't forecasting the price of, or whether it was going to be a warmer or cooler winter. They weren't forecasting or trying to forecast gas prices or anything else, but just solely on what the official forecaster, the climate forecaster, was going to do. And they guessed right, and they made a lot of money doing that. And then just after Enron, this company had a massive fine, if I remember correctly, because of price gouging in California. They had rolling blackouts in California, and they had to sack everyone in that trading floor. So within a year, they were not working anymore. But I was just interning. I was just getting a feel of that line of work. And I was interested in trading futures, orange futures and stuff like that. But I've never traded commodities, even ETFs. So really interesting. HSB Toll. Really interesting. Casanana says, oh, I follow the Austrian School of Economics. The reason we have high prices is because all governments print money, debase the currency, and run on debt. All fiat currencies fail. The American dollar is currently the world reserve currency, about 95 years old, I think, rarely lost 100 years. Since the inception of the Fed, the USD has lost something stupid like, well, it's a very long comment, this. I'm not going to go through all this at all. Have you noticed all those commodities going parabolic? Wave 2 inflation spike. Is it coming? Thanks for the vids. Okay. I will not be surprised to see a wave 2 in inflation. Now, I don't follow any school of economics, or however, I am not neoclassical. In fact, I don't like neoclassical at all. I just think they've got it all wrong. One of the things they believe is that the consumer is rational. Just don't believe that at all. But I don't really follow a school of economics as per se, just like I don't follow any political party, because I think they all suck. Well, that's not the right way to, wrong way. It's not the right way to say it. I don't think the political parties really serve any purpose. And the reason I don't think political parties serve a purpose is because all they're thinking about is getting re-elected. So all they're thinking about is a very short term. We need people in power who think long term, really long term. And our current system doesn't really do that. And to be honest with you, I don't know what sort of system would. But I do know the best type of leaders, and this is in organizations, countries, whatever you want to talk about, are leaders who don't want to be in that position because they think longer term. They don't think about their own personal gain. They don't think about the party's gain. They think about the future of the country or organization. And there have been leaders like that. Including Cincinnatus back in Roman times. George Washington was Cincinnatus follower, fan, I think you could call it. And these are two people who didn't want to be in a position of power, and they gave it up. That's the most important thing. So I think I'm going on a bit of a tangent here. I think I just don't align myself to any political philosophy or any school of economics. I do think eventually we're going to have, and the other thing is, I just don't think economics is, in my opinion, fairly young. And I just don't think we have an understanding of economics just yet. Enough of an understanding of economics to know what's going to happen. And that's the problem. So they raise interest rates to get inflation under control. But did they really have to? That's the question we should be asking, because one of the reasons they decided to raise inflation, raise interest rates to get control of inflation, because the ultimate goal was to increase unemployment. But unemployment hasn't increased at all. It's increased slightly, but not enough to really put a damper on inflation. You would think, according to rules, but anyway, to their logic, whatever. Anyway, so interesting line of thought here. For those who don't know, I actually do have an economics degree. Yes, so I have an economics degree and a meteorology degree, a master's in meteorology as well. So you might say I'm well-rounded, and I try to combine the two, and that's why I was thinking about getting into futures, combining economics, sort of futures trading of commodities, and meteorology. And the reason I was talking about oranges is I knew that a majority of oranges grown in the United States was in Florida. What occasionally hits Florida? Hurricanes. And there was a time, I think it was 2004, when a major hurricane hit Florida, price of oranges went through the roof. And that's how you make a lot of money in futures if you know that sort of thing. And you can use I could use my meteorological understanding to gain a bit of an advantage in the futures market. I could if I wanted to, but I found it really boring, to be honest with you. Anyway, Fishbowl says, given nickel, cobalt, magnesium, natural gas are on the slow support line, would you be able to share 3 to 4 stocks which you may had looked at on ASX? Maybe a couple of producers and a couple of explorers will be great. I am always finding these commodity cycles is pretty fun. I find commodity cycles really exciting because we're starting to see that now with copper, tin. We're starting to see those commodities move up, while at the same time we have seen lithium fall like a rock. So I love commodity cycles. Coal, oil cycle last 4 years. Now I believe it's time to put some money in these other 4. Cobalt, nickel, magnesium, natural gas, nickel. I'm pretty sure. Okay, so one thing what you could do, if you don't know any companies, what you could do is nickel ASX. So I thought market index might do this. So for instance, I'm pretty sure MLX, I'm pretty sure there's a company called Saturis, and then that's it. Okay, so by market cap, these are nickel companies according to market index. So some of these are probably, the nickel they're mining is fairly low. So there's Nickel Industries, of course, Nickel Industries. Western Areas is no longer on the ASX. They were bought out by, was it IG? No, it wasn't IGO. I forget who they were bought out by. Could have been IGO. And then we have MetalsX. I would have said MetalsX, Nickel Industries. I just completely forgot that. And then down below we have Centurious Metals. There it is, Centurious Metals. That's one I know. Sheffield Resources. Okay, maybe. I'm not sure though. So fair few of these are not. So Rocks Resources, I'm pretty sure, is a gold explorer. What I want is pure play nickel companies. Pure play nickel companies. Maybe Small Caps Australia has it. But some of these articles are pretty old. Maybe they don't, maybe they do. So nickel producers. So yeah, they've got BHP there, IGO. South 32. South 32, they do. South 32 is quite diversified. I'm pretty sure they do magnesium as well. Magnesium, nickel, they do coal, that sort of thing. Western Areas, again, Western Areas is no longer on the ASX. It was bought out by someone, and I'm pretty sure it was IGO. Maybe I'm completely wrong. Maybe it was someone else. Magnesium, I have no idea. Cobalt blue. That's the only one I could think of. Magnesium, I'm thinking South 32. Latrobe Magnesium. Let's have a look at South 32. What they mine. So I'm pretty sure they do. If you don't know what South 32 is, all their mines are south of 32 South. So it's a latitude thing. I'm pretty sure that's true. Okay. What do we mine? There should be some sort of list of all the stuff they mine. Our commodities. Maybe that's it. So alumina. Yes, I forgot about alumina. Aluminium. Copper. Silver. Lead. Zinc. Nickel. There we are. Nickel. Manganese. So that's not the magnesium. metallurgical coal. So not quite manganese, bauxite. Okay, so in natural gas, I'm pretty sure there's quite a few of those. I'm pretty sure maybe not Santos, Woodside. Pretty sure Woodside does a lot of natural gas. I could be completely wrong. Maybe Cooper Energy, something like that. I'm pretty sure Cooper Energy does a lot of natural gas. Again, I could be completely wrong. Cobalt Blue is the only one I know. Cobalt Blue. There it is, Cobalt Blue. Full list of companies. Let's see what is here. Meteoric Resources, Anson. Look, the highest market cap is 447. Javois. They do Javoy Global. I had a look at this company in the past and I just completely forget what they do. And they don't say here, of course. Anyway, so I don't have any companies in my mind other than those I've just mentioned, but definitely commodity cycles are really interesting and really fun. And that's why mining companies are not long-term holds, in my opinion, because they go through cycles. Anyway, I love the part about Droneshield. You're welcome, although they're in a trading hold now because they're doing capital raising. Will you partake in the capital raising if you're a shareholder? Thanks for the video. Nice. Well, that's what he's saying, or she. Is Droneshield, DRO, a long-term buy? Small growing company which has turned profitable, positive geopolitical tailwinds. Now, I can't give advice. Is Droneshield, well, put it this way, Droneshield is in my small cap portfolio, which means I'm not trading it anymore. And I do think there is a lot of potential in Droneshield. Doesn't mean they can meet that potential, but there is a lot of potential in this company. And so when you do have a look at my small cap portfolio, there's a lot of companies in there because I know some of those companies won't make it. Now, I have been thinking about transforming my small cap portfolio into a small cap / trading portfolio where I trade these small caps a little bit more frequently so I can rule out those companies that drop 70% or 80% or even 90%, which I do have a few in there. But I'm not sure how it's going to work. So I'm still trying to find a way how I can sort of both own these companies for a while and also trade them as well. NGI has an update, AUM today. Hope for some dividends from the company. Keep up the good work. NGI, I'm pretty sure I've mentioned NGI a few times. So let's have a look at the chart for this company. In fact, this might be one of the first charts I've looked at, apart from Clarity Pharmaceuticals. And the chart looks pretty good. This is the 1 hour chart, by the way. So this is something I'm playing with. I sort of used 1 hour chart when I started trading, and I'm transitioning back there. There is some power to using 1 hour charts. More quick, more, what's the word? I can react quicker. So the daily chart looks pretty good. The hourly chart looks pretty good as well. So no weakness at all. So this would be, so I have a watch list now called the 1 hour uptrend. This would be in the 1 hour uptrend. It's been an uptrend since early January. So you could have bought this. I would have bought this, say, at $1.27. Now it's $1.66. So it hasn't got up that much, but still, it's in an uptrend. I'm not sure if there was a question there. Okay. I think I did mention NGI on that day. I can't remember. Well, there's Liam again. Oh, it's another question about the market. Okay, Telstra, Harvey Norman, and Accent Group. Let's have a look at the charts for all these, Liam. And let's have a look at the 1 hour chart. And I'll tell you if I would be even holding these. So Telstra Group, in my opinion, is not a long-term hold. And if you look at the 1 hour chart, this is a really ugly chart. It's actually broken through a support level as well. That was on the 15th of April, so not that long ago. So it's gone from $4.08 to $3.65. You might not say that's not a massive drop, but it's still in a 1 hour downtrend. Before that, it was in a fairly weak uptrend. I might have played that, maybe not. I have traded Telstra Group in the past, but yeah, you can see there has been more well-defined downtrends than any well-defined uptrends going back to June of last year. Share price from June last year has decreased from 445 to 365. So Telstra's chart looks pretty nasty right now. And there has been a couple of gap downs. You're right about that. Another one was Harvey Norman. I'm pretty sure this chart looks pretty bad too, the 1 hour chart, after looking pretty good before that. So this sentiment in this company has turned negative. So it was a really nice uptrend, Harvey Norman. So if I was trading this on the 1 hour chart, I would have possibly bought this. Not necessarily would have, but it sort of turned into an uptrend in early December last year at a price of about $3.90. And then I probably would have sold it just based off this. Probably would have sold it at about $4.80. So that's actually a nice little gain over a short period of time. And then the other one was Accent Group, and I'm thinking this is the same thing. And you're right, there was a gap down here on Tuesday. Pretty sure we had a pretty bad day on Tuesday, and gaps, some say gaps always filled. It's not true. So it just shows you we did have a fairly bad week. Week as in W-E-A-K, and then week as in W-E-E-K, so week. And Accent Group, oh yeah, this has gone negative. Yeah, this, based off my 1 hour chart, yeah, wouldn't be holding this. And there was a nice, fairly volatile, I don't like these volatile charts up and down. I like the smoother ones like we saw with NGI. Nice, smooth uptrend. There was another chart I was looking at today. See if I can find it. It's probably my 1 hour uptrend chart. See if I can find it here. Oh, is this one? I think it was Adriatic. This is what I'm looking for. So this uptrend started not long ago, 7th of March, so just over a month ago. And this is sort of the 1 hour chart I'm looking for. Just consistent up. Little dips aren't too strong, and just going up in a straight line. Sort of like Gentrack. If you look at the Gentrack daily chart, a beautiful daily chart, exactly what you look for. But if you look at the 1 hour chart for Gentrack, oh, it's starting to look weak. Starting to look weak. The last time it started to look weak was way back in October last year. Share price was 460 at that point. Yeah, starting to look a bit weak. So it needs to rally for me, maybe not to sell out of my holding in Gentrack. Interesting times, I'm telling you. I think even Metals X looks pretty good. So the 1 hour chart. Yeah, this is the nice 1 hour chart. In fact, I've got a auto fit. There we go. This is a beautiful 1 hour chart. Sort of broke out 5th of March, pulled back, another pullback, tested the breakout twice, and then a beautiful. I was following this at this point. I'm so disappointed I did not buy in. The share price got to about 33 or 34 cents because I was following it and I saw the pullback. I went, nah, maybe not this time. Anyway, so thank you, Liam. Nirvana is your favorite band, Nirvana. Are you a fan of Dave Grohl? Or what's his name? The guy who killed himself. I can't believe I can't think of his name. Dave Grohl, jeez. What's his name? Singer, Kurt Cobain. I'm getting old. My memory's just going. What do you think of Graphite? What's your insight on SYR? That's the only company. There's actually a few graphite companies. Syran Resources is the main one. What's your insight? I have no insight on Syran, although I'll just tell you the chart. So let's have a look at the chart for Syran. I am keeping a close eye on their Appendix 5B, and they are still burning through a lot of cash. So that's what I'm waiting for, some sort of turnaround for Syran, either by the chart, and if I see a turnaround in the chart, that will be telling me the market thinks there is a turnaround in the financial state of this company soon. So let's have a look at the chart. We'll look at the 1 hour chart first, and something bad happened on the 15th of March. Share price dropped on open that day after looking okay. But yeah, the 1 hour chart doesn't do anything for me. You notice a lot of volatility in this company as well. And I don't like that sort of volatility if I'm trading 1 hour chart. But if you look at the daily chart, there's no reason to get excited about this company right now. It's in a downtrend. I did trade this, by the way, back in 2022 during this phase when the share price went up like this. So I wrote it from about, I think it was about $1.25. I didn't sell at the top, but I did sell on the way down at about $2, I think, something like that. And yeah, the share price moved into a well-defined downtrend not long after that. And I'm thankful I sold at that point. So no insight into Syran Resources. If you just have a look at financials. So last year, they lost 126 million. Before that, 36 million. Before that, 72 million. Before that, 88 million. Before that, 188 million. They made $153 million in revenue in 2022, down to $71 million. So Graphite, I've been following Graphite for like 8 to 10 years, and I've yet to see any company really make it with Graphite. And I've been hoping Syran Resources would be the first one. Maybe I'm wrong. Maybe another company has done it, but I haven't seen or can't remember that company. Okay, can you have a look at IME? IME. IMEXS? Is that it? IMEXS? IMEXS. Can't believe I know that one. Okay, so I have no idea what this company does. Let's have a look at IME. Oh, I've got to log in. What does this company do? So what you could do is, if you don't know what a company does, oh, it's a software company. Well, how do I know that? Well, this announcement says IMEXS, IMEXS, IMEXS. I have no idea how to pronounce this. This company renews software contracts. Oh, who would have thought? You can find something about a company just by looking at the titles of announcements. Okay, they've done a capital raising recently. Investor presentation. I could look at the annual report, but I'm looking at the financial year 23 presentation because I'm lazy and I just like the pretty pictures sometimes and the pretty tables and pretty stuff they have. Okay, so software company in health. Something to do with health. Medical imaging software, radiology services. I don't mind imaging software companies, I'll be honest with you. Global footprint, 18 countries, 28 distributors in 15 countries. So this is a worldwide company. Now let's have a look at the results. You need some money though. Revenue of 19.7 million, underlying EBITDA of 0.4 million, analyzed recurring revenue of 25 million, net operating cash flow of 2.6 million. Things are looking pretty good for IMEXS. Signing some contracts. Okay. Software, 7.6 million in revenue, radiology 12.1. More EBITDA in software, which is understandable. More ARR in radiology. Okay. Increase in revenue from last year. Everything's up for last year. EBITDA down, but underlying EBITDA up. Okay. So, IMEXS has a markup of $24 million. Okay. So just based off what I am reading here, and how long has this company been around? That's the other question. Let's have a look. So where's this? IME? You know, sometimes if you don't know what a company does, you just go to snapshot in market index. It tells you the whole thing, everything about it. Founded in 2012. There you go. And it gives you everything about it. So you could easily do that. But I like to go to the source. I like to go to the company itself. You could go to the website as well. No major brokers. What I was looking for, well, when it listed, let's have a look. So listed in 2006. So obviously it didn't list in 2006. This is more likely a backdoor listing or something like that. Former company names. So Omni Market Tide until 2018. There you go. Anyway, what do I think about this company? Nothing yet. Now, based off the brief look at their financial year 23 results. Now, another thing you could do is just sometimes I would do this, but this company's fairly young and not a lot of revenue, but I will sometimes look at FinChat. Just look at this particular website, this part of the page. So market cap is 25 million. We already know that. Margins 40.7%. EBITDA is negative. Underlying EBITDA is positive. Free cash flow is positive, 6.9%. Return equity, well, yeah, a lot of this is negative, so it's not reliable. But what I would look at is just go to the income statement and just look at revenue growth. So what we're seeing here is sort of the revenue growth I want to see. Nice, consistent revenue growth. Seems like they are pushing towards that inflection point of becoming profitable on an ongoing basis. So definitely a company to put on your watch list. Now, the last thing I always do is look at the chart. So here's a daily chart. Share price was in a well-defined downtrend from 2021 through to near the middle of 2023. And since then, share price is going sideways, just slightly going up, just going sideways. So if I had shares in this company, I wouldn't be selling because there is promise. Without even knowing exactly what the company does, I think there is promise in this company. I should do research on IMEXS. Oh, yeah. Thank you, that's Showbiz. One of the reasons I do this channel is to share ideas, and sometimes the viewers of this channel share ideas with me, and I'm thankful for it. This daily rundown is great. Well, thank you, Astronomic. Zip report is amazing. Not sure why it went deep red today. Well, it's gone even redder since then. I can tell you that much. People probably expected better. Typically, that's what happens. If people expected better, even if the company releases what seems like really good results, the share price will go down. On the flip side, a perfect example of this is Bank of Queensland. On the surface, the results looked absolutely horrible. Even the language from the management and the outlook sounded pretty bad. The share price rallied 6% because the numbers were better than expected. The market thought Bank of Queensland was going to have an absolutely terrible result. It wasn't terrible, it was just horrible. Although maybe terrible is better than horrible. I don't know. So sometimes it's not the results, it's the expectations that drive the movement in the share price. And if it's not the expectations, it's any sort of guidance or trading update the company has released. So never look at the results, or if you do look at the results, know the expectations beforehand. Nice video. Just wondering if you have sold out of Findi. I should have, and I tell you this much, Findi is very close to a sell. Extremely close to a sell, and this is based off my 1 hour chart. In fact, based on my 1 hour chart, it is a sell. So the 1 hour chart looks beautiful until the big sell-off on the 16th of April. And that was the sell point. In fact, I could have sold any time since then. Share price now to 248. This is possibly a sell. I have been thinking about it. Yes, I have been. Okay, do you still believe in PPE's $1 resistance level? It feels closer to collapsing as time moves on. Yes, I actually had a look at this chart last night. So I did a night shift and I was going through some charts during some downtimes. And I came to not the 1 hourly chart. The daily chart looks more interesting with this one. So PeopleIn has been in a horrible downtrend since forever. And when I say forever, I just mean if you're a newborn baby, 3 years is forever. Maybe if you're a 3-year-old, 3 years is forever. Share price back in 2021, the middle of 2021 was $4.80. And this is a horrible chart. There's no reason to be holding this company during this downtrend. It's just in a well-defined downtrend. That's one thing I'm learning. Don't hold companies whose share price is in a well-defined downtrend, even if you like that company. I'm becoming that way or thinking that way more and more. Even if I really like the company, why am I holding that company? Yet I'm telling you, I have a quality portfolio and I won't sell those companies in that portfolio. And I don't think many of those companies are in well-defined downtrends. And if they are, I'm more likely to buy some more because I think because they're quality companies, they're becoming better value. Now, PeopleIn is not a quality company. And because it's not a quality company, I don't care how much it falls. I don't care how much it looks good in valuation. It could fall even further. And I can almost guarantee you, as the share price was falling, there were people saying, oh, this looks pretty good value. It was $4.80 not long ago. Now it's $2.40. Getting this at a 50% discount, I'm going to buy. And that share price has continued to fall since then. Now, $1. I've mentioned round numbers are very powerful. People are stupid. Well, you're not stupid. Generally, as a group, people are stupid. They love round numbers. And $1 is a very important number for PeopleIn. It is struggling to fall below $1. Now, I traded PeopleIn back in December. It moved down fairly quickly to $1 and then bounced. And I was expecting that bounce. It happened. And I actually done this trade a few times, and it's been successful. The other thing I look for is high volume. You can see massive volume coming in, increasing volume, in fact. And the day it went and hit that $1 level was the highest volume. That's a clear signal there's going to be a bounce. And it bounced pretty hard. I sold it 20% profit. It went up to $1.44 at its peak and then fell back down. And it went from $1.44 back to $1 in 5 trading days, hit $1, in fact 98 cents on the 26th of February, but you can see there was no bounce after that. That's a bad sign. So the share price high after that is around $1.10, and it's come back to $1. Right now, $1.02. And that's telling me there's no buying as the share price hits $1. So yeah, dollar's becoming weaker and weaker. Some might say the more times the share price hits a support or resistance level, it becomes stronger. I think differently. I think, in fact, it might become weaker. I see this in here. So you can see the share price of PeopleIn fell below this support level. It bounced, hit the support level, and then pulled back. It didn't quite get there again. So if it kept hitting this support level, or this resistance level now, because support becomes resistance, there will be an increasing chance the share price will get above that level if it keeps going back and testing it. And it didn't happen. So that's what I think could happen now, moving forward with PeopleIn. And that's what Big Boy Baby is thinking as well. It feels closer to collapsing as time moves on, and probably have to agree with that. George Noah says, "Hiya, Mr. Kneppy. You can call me sir if you want to. At the start of this rundown, I heard you mention Metarock as one of your recent SP purchases. I must have misheard you. You definitely misheard me. Can you clarify, please? Like your work, sir. Cheers. Metarock. Okay, I know. Not mental rocks, Metarock. Yes, I bought Metarock. This was just to buy based off the chart. And I think people are buying this because they think it's cheap. So what happened with this company? They sold something and they got heaps of money back, and they've got a lot of cash now. So this was just a really interesting chart. Now, illiquidly traded, I'll give you that. And that's something else I'm thinking about. Only trading liquid companies. I have quite a few illiquidly traded companies in my trading portfolio. And to be honest with you, they're all performing really well the past week. So I'm talking about, let's go to have a look at my short-term portfolio. So I'm talking about Cobalt, illiquidly traded, still an uptrend. Shape Australia, illiquidly traded, still an uptrend. In fact, beautiful uptrend. Adrad, still in an uptrend. Some volatility there, but still going up. Swerve had an okay day the other day, but down a little bit on Friday. What else is illiquidly traded here? Southern Cross Electrical Engineering. I'm not sure if you can say this is illiquidly traded anymore, but look at that uptrend. Beautiful. This was just a trade based off the chart. Also, I like the future of the company. And then Metarock. It's just the chart. I've seen this sort of scenario play out many times. You get this well-defined downtrend. Beautiful downtrend. No reason to buy it. No reason to buy it. No reason to buy it as we go downtrend. And then you see a point where the share price finds a bit of a bottom, and it's sort of starting to see that bottom at around about 10 cents back in middle of last year. It reached 10 cents quite a few times. In fact, about 4 or 5 times. So this is a sign the share price is consolidating. There's no more selling. Now, people don't want to sell this below 10 cents. They see some value, or there is people see some value when the share price of this company gets to 10 cents. And so anyone who wants to sell is being met by some buyers. But then the share price started to not rally, but it didn't move any lower than, say, 11 cents or 12 cents back in January. And you can just see it's slowly going up. And then they announced this, released this announcement, I think it was the 18th of March. And even then, share price went sideways after that, right on 20 to 21 cents. And on this day here, on the 10th of April, I bought some shares at 20.5 cents. This little dip was all it took for me to buy shares. So I put a bid in. The bid was in there for a while, and someone decided to sell at 20.5, and I bought some shares. And then it just took off after that. I think it was just really fortuitous timing, because a lot of times you'll see the share price go sideways like this, and it gets really close to this sort of this green shaded area, which is short-term moving average, and that's when the share price starts going up. So it's fortuitous that someone sold on that date just when the share price was getting to that sort of that takeoff level. I see this a lot, this pattern, and pattern recognition is quite important. And this was just a beautiful looking chart for me. But again, the liquidity traded. And again, share price hasn't really done much over the last week when the overall market is down a fair bit. So Metarock, not mental rocks. Maybe I should pronunciate a little bit better. What's the word? There's another word for that. Elucidate, date, or something like that. A chart on MZZ, please. I bought some at 6 cents. It was 55 cents a few years ago. Do you think the downtrend is over and is on the way back? I have no idea what MZZ is. If there was an EZ, if there was an E instead of M, I would know exactly what the company is. I'm assuming this is a mining company. Matador. It's not Matador. Oh, it is Matador. Okay. I can't believe I did know the name of this company. It just shows you, even though I have not looked at this company, just sometimes, because I've been investing for about 15 years, some of these companies just get ingrained into your brain. And I just saw MZZ, didn't know what the company was, and just clicked. It's Matador. And I thought, nah, it can't be Matador. Okay. Who was this? Sean. Sean looks pretty good. Chart looks pretty good, John. I think the bottom has been reached. Okay, few interesting facets about this chart. So, look at that chart. You said 55 cents not long ago. You're not wrong. So, downtrend since then. So, have a look at the volume as it's going down. Not a lot of volume. You see these occasional spikes. So, occasional spikes, very low volume, very low volume back in August through October last year. And then look what's happened in November, December. You can see the volume increasing. Some really big volume coming in. Some big spikes. And I'll call myself a novice when it comes to technical analysis. And I have read a few times that sometimes, maybe not always, but a lot of times, volume will precede price action. And maybe this is proof. We started to see the volume coming in late last year. Share price really didn't do much at all. Still going sideways, and then all of a sudden, the volume, share started going up. Doesn't look like the company released any news flow. Just the share price started to go up, and we started to see increasing volume again. Now, what does this company mine? It could be just copper, nickel, something like that. It says gold. Well, gold. Gold makes sense, yeah. So this could be just maybe just good timing. Gold's going up and Matador mining is going up as well. But the chart looks pretty good. I'm telling you that much. The chart looks pretty good. Market cap is just under 40 million. So again, this sort of company, the share price and the chart is beholden to gold prices. If gold prices plunge, Matador mining plunge. So I think you need to be keeping a close eye on not only Matador mining's chart, but also gold chart as well. Thank you, John. Any thoughts on the $400 million federal government loan to A4N, Alpha 4N? I'm pretty sure that's what that is, Alpha 4N. Alpha 4N, high purity alumina, or Alpha HPA. I'm pretty sure HPA is high purity alumina. I could be wrong. Here it is, 400 million Australian government support for stage 2 development. I have no opinion about this whatsoever. However, I would say the market liked it without even looking at the chart. So is this like a guaranteed $400 million? Loan facilities, Australian government loan facilities. Alpha has now received conditional approval of 320 million in project loan facilities and 800 million or 80 million cost overrun facility in respect of stage 2. So the question I would have is, how close are they to becoming generating revenue, that sort of thing. How long is it to go for this company? But high purity alumina, pretty sure that's what it is. HPA. High purity, like 99.9996%, something like that. Let's have a look. H purity alumina. High purity alumina. I'm right. There you go. Does this go into phones and stuff like that? Percentage. I wanted to see what the percentage of. Critical minerals group. Is it a critical mineral? Here we go. High purity alumina uses. I thought it was like mobile phone screens and stuff like that. Sapphire glass, artificial sapphire glass. Yeah. LED glows. There's a few companies like A4 HPA on the ASX, if I remember correctly. I did have a look at one of the companies in the past, but I don't know anything about this company. So let's have a look at the chart. So the chart should tell us enough. H4, is it H4N? Yes. Okay, so this is the daily chart. Let's have a look at the weekly chart first. Let's go back. Well, the weekly chart looks pretty good. So again, you get a different perspective. So a long-term uptrend, and notice the long-term moving average, it bounces off that. It's done it 1, 2, 3 times now. So the best time to buy this company was in October last year. And the share price just fell like a rock, and then it bounced, sort of V-shaped recovery. That was the time to buy. Chart looks okay. There was a little bit of selling this week, which is understandable. Let's have a look at the 1 hour chart, something I'm going to do more and more now. Some gaps up. So on this day, the share price increased on open by over 10%, and then the share price fell through the day and kept on falling. A little bit of bounce in the last hour trading on Friday. Anyway, so chart looks okay. 1 hour chart looks okay. What's the market cap of this company? That's the other thing. Probably $1 billion. Oh, look at that, $1.01 billion. There you go. I'd still call this company a story stock at this point in time. So probably I would have no interest because I want to get away from that. I used to buy a lot of story stocks. I just love stories, and story stocks I was attracted to it because of the potential. Wow, the potential of these story stocks is unlimited. But I'm trying to get away from that, trying to focus on, let's say, real companies who generate revenue and preferably are profitable. Who knows? Alpha HPA probably will get there at some point. And I probably shouldn't say probably. They have a chance to get there, and I think the market thinks they will, based off the market cap of $1 billion. How about featuring, Robin Stocksworth says, how about featuring Oncosul Medical Limited in one of your upcoming videos? Their innovative cancer treatment technology is definitely worth a closer look. Keep up the awesome content. Now, I've had a lot of ideas from people on this channel, and I've written them down, but I have not got to doing any of those videos. I've got it written down somewhere here. So Oncosul, is that OSL? Is Oncosul OSL? Oncosul, it is. Video. And that was the series, 2 small caps to buy. I haven't done that video in a while, that series in a while, but it is highly popular. People love to watch a video that I call 2 small cap ASX companies to buy. They like being told what to buy, even though I can't give advice. It's illegal for me to give advice. Amazing insight, thank you. Promedicus. You're welcome. Sinitar Jones. Dice Keys 3354. Well, you're a gun, sir. Thank you. I really need to pay attention to numbers, like you said, and not presentations. I get a bit excited when I see how much they grew. They're claiming 9-ton grow of weed for first half of 2024, which has a value of pharmacy of $6,000 for a pound. It means that 9 tons is equivalent to 18,000 tons, just a turnover 108 million. to add to that, weed is a highly profitable game if done right. I think I jumped the gun a bit. Okay. Yes. I actually I mentioned earlier in this video that I'm lazy and I went straight to the presentation. In fact, the presentation usually is the last thing I look at if there is a presentation. If I only look at something, it is the financial statements. That's all I look at. I don't care about any potential the company has, any promises the management have stated. I just look at the numbers. Now, sometimes I'm going to miss a boat. That's okay, because most of the stories will never become anything else but stories. Now, Can Group does have revenue, so it's more than a story, but they have to show or realize their potential at this point in time. I forget why they were in a suspension. I completely forget. Again, my memory, I'm getting old. My memory's bad. Droneshield capital raise today. Yep. Any thoughts on potential share price direction after trading hot? It's going to go down. I can say this much. If it doesn't go down, I'll be in shock and be stunned if a Droneshield share price does not go down, because it was a 28% discount to share price. It's going to go down. Yichi thank you. Okay. Oh, a few more to go here. Okay, Anderson 6379. Okay, thank you for your comments. Very kind indeed. I'm not going to say, I'm not going to speak this comment out loud, but thank you. Thank you. Yep, Growthpoint is a REIT based in South Africa. Really? There you go. Largest one by floor space. Expanded across the pond as well. Did not know that. There you go. You learn something new every day. Today, that's what I've learned. Did you Droneshield trading halt? Capital raise. Now, I talked about Droneshield the previous day, I'm pretty sure, and that's why I didn't mention Droneshield and their capital raising. So yeah. Promo, well, thank you. Is that just, I have no idea what that is. I agree with your MRM offshore rant. Yes. I thank you, PW4326. Female, are you female? We need more female investors. It's my one wish in life. With MA offshore, what do you do? Oh, okay. I have no idea what's happening with this company. Okay, so I always want to say MMA, but it's MRM. Share price went up another 4 cents, up to 269. What is going on? Becoming a substantial holder. I haven't even looked at these. So is someone buying shares in this company for another potential takeover at a higher price? There is no logical reason other than this takeover bid, this lowball takeover bid, will not go through for the share price to be at a premium to the takeover bid price of $2.60. Something odd is happening. I'm not selling just because of what's happening. I have no idea. If the deal falls through, the share price will drop 10% or worse. Possibly. I would actually say yes. Yes, but because they issued a profit upgrade or a positive trading update, will the share price fall if the deal falls through? Interesting question. I'm not so sure now. Another company like this is RUL. I know RUL, RPM Global. I think it'll be gobbled up in a year or two. I hope not, but I think you might be right. In fact, RPM Global is like the perfect takeover company. There are so many companies out there who would take it over, mining companies included, software companies. And I think it's pretty cheap. I don't think the ASX fully understands the potential for RPM Global. And a fear of mine is a company that is undervalued, in my opinion, like RPM Global. And for full disclosure purposes, I am a shareholder of the company. I think there is that potential that someone will see that it's cheap and do what they've done with MA Offshore and buy it on the cheap. And yeah, I don't know. Can you do a TA on St. Barbara? I can do that. Helen Calamaris, hopefully another female watching this channel. More females. We need more female investors. There has been research done, I'm not sure if this is true or not, that female are better investors than males. Maybe because they can manage their emotions better or deal with their emotions better. I don't know. I think it's more like they take less risks. That's what I think. I don't think it's had anything to do with emotions or anything like that. I think it's they take less risk. And what I've seen with a lot of male investors, they take a lot more risk, and those risks can be quite harmful. Okay. So I'm pretty sure this looks pretty good, because I remember looking at this within the last 2 weeks and going, this looks pretty good, pretty good. And it should look good. This is a 1 hour chart, and this looks stunning. So I've mentioned volume a lot. Even in the 1 hour chart, you can see the massive increase in volume when it broke out. It broke out on the 2nd of April. This is the time to buy. I wish I was paying attention. At 19 cents, now it's 30.5 cents. Now, it's understandable because this is a gold company. Gold prices are doing really well. And you can see here, not a true consolidation period, but share price was drifting lower very gradually, very slowly. So this is a breakout, really good volume coming in as well. So yeah, beautiful chart for St. Barbara. I just like the 1 hour chart, just wonderful. This is sort of the chart I'm looking for. Anyway, so thank you to Helen, just wonderful chart. And again, I'm going to go back and just say that and the future share price of St. Barbara is going to be related to gold prices, and gold prices are on the tear right now. They're still going up. I've heard a lot of people say, I've seen a lot of tweets saying there's a bit of a correction for gold, but that correction has not come. I think for ALC, Alcidion, it's more important for them to show the market they can win contracts. Perhaps, you could be right, then becoming cash flow positive. A lot of punters are pretty unhappy about the pipeline that hasn't materialized. Yeah, okay. Particularly around the UK. You probably know the company more than I am, or I do. Companies saying they will be cash flow positive in Q4. Yeah. So you probably know the company more than I do. But one thing I'm looking for personally is them becoming cash flow positive on a continual basis. So possibly one of the reasons why they haven't become cash flow positive is just not winning these contracts. So it's all sort of related in the end. But if they do announcing contracts, you could get aboard the ALC train or the Alcidion train, and I might take a while to get aboard the train because I'm waiting for that proof of concept. Okay, and I've already discussed Liam Jones and promo, and here we have Animal Spirit. Great video, Kneppy. Can you please answer this question during this is the last question, I believe. The next Q&A show, I bought GQG, my least favorite TIG code on the ASX, thinking that it was an Aussie domiciled company as it's traded on the ASX, but I got a W8 Ben form to fill up from Link Marketing Services. Can US domiciled companies trade on the ASX? And will my GQG dividend be deducted at 15% by Link once I send the form back? Probably not the person to talk about this. Now, the W8 Ben form is beneficial for you if you are owning or you do own American-based companies. I'm absolutely sure about that. I've actually filled out a W8 Ben form for my YouTube channel, so I get tax back or something, and I don't get massive tax taken out or something like that. So it is beneficial to fill those forms. Now onto GQG. I have never heard this before. I have never received a W8 Ben form from buying a company. Now I am trading at GQG, but that's through Superhero, and Superhero technically owns a company, but it's in there. I forget how it's done. They own the company. So yeah, so that would be on them. They would do that thing for me. Like I trade American companies through Superhero, so I didn't have to fill out a W8 Ben form because technically Superhero owns those companies. Technically. Okay, so I have no idea about this, but I'm pretty sure that GQG is an American-based company. I'm an American-based fund manager. I'm absolutely sure about that. So what I'm going to do now is go through some of the announcements when they list. They didn't list that long ago. Just going to market index. Okay. Two things. I'm going to see if there's any interesting announcements here. A lot of announcements are released when a company lists on the ASX. So this one is interesting. Regulation as foreign ownership restrictions. Don't usually see that. So regulation as foreign ownership restrictions. This is telling me to own the CDIs, CHESS depository interest in this company, you have to be non-American. I think this is what this means. This means that no excluded US investor, as that term is defined, may acquire GQG's financial products. The CHESS depository interests, which are scheduled to commence trading on ASX code GQG, are not permitted to be acquired at any time by or for the account of or benefit of any US person who is not qualified institutional buyer. Excluded US investor. Maybe what they're doing here, just a maybe, without me knowing anything about this, is this W8 bent form is a way for them to know that you are not a US investor just by what they've said right here, that US investors are excluded, or US persons are excluded from buying these or this company, or these shares in this company, or these CDIs. So maybe that's what they're doing. Otherwise, I have no clue. So not really the person asked, not really the person to answer this sort of question. Not an expert in this area, but that is what I would be thinking at this point in time. I could be completely wrong because I've never seen this before. That's all I've got for this video. So if you do want me to ask a question, maybe not as tricky as Animal Spirits, W8 Beneform, which I'm probably had no help or gave no help at all, just leave your thoughts, your questions in the comment section of this video or any video I record in the next week. Other than that, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.